Welcome to 𝐄𝐓𝐇𝐄𝐂. We talk about investing, finance, and professional development. So current time of 7:56 a.m. on Eastern Time on July 20th, on Wednesday. Ethereum contract $1,606, up about 4.16% so far. With respect to overall crypto market and the equity market on this Wednesday pre-market perspective, there's a lot of colorful factors that's driving the macro affectation. So let's just dive right into these pieces one by one. So with respect to obviously some of the earnings, it seems like collectively it's been positive, and seems like also investors are giving a lot of these stocks a lot of slack ever since the momentum that we've been percolating on Monday. Obviously, two major banks, Bank of America, Goldman Sachs, both reported positive earnings. Subsequent to that, some consumer retail companies also reported positive earnings. And Netflix earnings was not great. Obviously, it's aligned with Wall Street expectation, but it's not like super like robust, right? But they were just good enough for investors. So after market hours, as the report came out from the management guidance, up 5%. So it's back up to like the $200 mark for Netflix stock. In addition to that, I'm seeing some activity with respect to just more regurgitation news around mortgage demand. It drops to a 22-year low as higher inflation, inflationary pressure, but also interest rates is crushing home buyers, which makes sense, right? Why would you want to buy a house or borrow any debt, when it's more expensive to be borrowing the same amount of debts that you before, right? So that makes a lot of sense. And then some other news that I'm also seeing that's kind of popping up. It seems like there is some news around the global chip shortage. It seems like there are a couple of economists and analysts from respective investment banks like Citi and also Morgan Stanley talking about respect to the upcoming earning call for Tesla, obviously, and also some other EV companies that chip shortage is still an issue that they're still trying to solve and try to get over. And with the political additional tensions that we're seeing among countries, both the Cold War, but obviously with respect to the actual war with Ukraine and Russia, seeing a slowdown for these respective EV stocks, or also like obviously stocks that have to do with imports and exports, especially with the chip components, can be hindered in the semiconductor industry. And then I'm also seeing some news around the CDC. So CDC have decided to end their COVID-19 program. So with that protocol being relieved, cruise companies, all the major stocks like Carnival Cruise, Royal Caribbean, they all have risen after market hours. Obviously, it's a counterproductive type of dynamics. It kind of anti-correlates. So that's I guess a good news as we are separating ourselves from the COVID influence anymore. And that's pretty much it on the news front. Obviously, the last one I'm seeing here is more about COVID again. Seems like CDC has cleared the Novavax COVID-19 vaccine for adults. Says that the shots will be available in coming weeks. So seems like there's more vaccination that might be coming. But as we are, obviously shifting more and more away from the COVID as like the primary factor on driving the corrections that we've been seeing so far, with respect to the inflationary pressure, the interest rate is more the primary components right now, right? So the way I kind of weight this would be like the highest priority would be the inflationary pressure, interest rate would be the highest prioritized type of factors on driving the market volatility. Number two would be with respect to COVID. Number three would be with respect to the I would say on par with the Russian-Ukraine war that we're still trying to get over, right? Seems like it's still elongating for a little bit. All right, so let's just dive right into the technical to see what's going on. And on the commoditized side, on oil is also up about it's like above $100 at $103 at the moment, and the 10-year yields is also just a hair below 3% at 2.97% so far. So let's just dive right at a recording time of 10:01 a.m. on Eastern Time. Ethereum currently at $1,607, up about 4.21% so far. So right now you could see that we have tried to get up to the next level of 1650. So we attempted, but like it kind of gave up a little bit, and or at least we trying to get there right now. And what we're seeing right now is that this the overall crypto market is trading on momentum right now. We started on a good note, right, with respect to on Monday. Ever since the bank stocks released positive earnings, and obviously with respect to the merge dates on September 19th for Ethereum, propel a reversal onto the market. But is this reversal, or rebound, if you may, sustainable? Right. Ultimately, we are very overbought at the moment at 68 out of 70. So 70 on the 70 scale would be very overbought. And we could technically, let's see if we have any resistance coming. So we will get major resistance coming at 72 or 71.59 out of 70. And at the same time, we've dragged it for a long time. So looking for some sort of apex, as it come back down would be very logical. Especially we are approaching the FOMC meeting, in a week or so. But on a weekly, we are about to form a golden cross, and monthly, it still looks like we have separated for quite some time. So I would say, again, near term, we might see some volatility because as we approach the FOMC meeting. And with respect to all the catalysts that we're seeing so far, despite the corporate guidance looks positive so far, it's not positive coming from a healthy way, like we have talked about already, right? These are just psychology on investors' sentiment, convincing themselves that we have hit the bottom and we're rebounding. But in terms of like, is it actualized? I would say that's still TBD at the moment. So right now, I would be extra cautious about buying at this level or think about chasing in, because like we are hitting some monumental levels, especially as we reach 1790. That's the monumental level that we will get blocked. So, but I don't think we will actually have a shot at doing that because of the fact that we are going to be hitting some blockade at 71 out of 70, especially extremely overbought. And if you just look at the chart by itself, right, you never buy when it's on a very overbought setup. We are very overbought right now. So, and this is like within a time spectrum, right? So I would advise, not advise, but I would suggest, probably waiting for it to cool back down first, like when the RSI dip back down to below like a 30 on an RSI scale at least, and when we're about to form a golden cross all over again. Like right now, we have formed a cross section for a long time ever since we were back in June 22nd, right? So this is gonna be, so we have to kind of cross down before we cross up from here. And then Bitcoin is, we are in between levels right now. So lingering on at the 63 out of 70. So the next level leap up we have to get to will be somewhere around 26,500. So you can see clearly we're in between levels right now. So this has lack of support, right? And at the same time, we're quite dragged up. But with respect to weekly and monthly, again, right, we are looking fine, right? We are about to cross up. So our golden cross about to be formed, and we have found some plateau, some support as well. So coming back up should be, weeks out, and also on a monthly perspective as well. Same thing, like months out at the same time. Okay, so and also on the overall other side of the spectrum, I would say Classic is also cooling down right now, which makes sense. It seems like we're forming apex already. Dogecoin, I would say, yeah, quite dragged up. Yeah, I would say across the market, I'm just checking them like one by one. Yeah, most of them are relatively overbought. And at the same time, most of the charts on the MACD front are above the signal line, so they have to cross up eventually. So they all indicate that there should be some sort of a short-term volatility on a downtrend perspective. But as we get over that hump, which is, I would say, is the FOMC meeting, combined with the anticipated pressure and the Friday that's coming, like the weekend affectation, we should ideally see some volatility short term and then a rebound officially, months and weeks out from here. Well, appreciate you. Have a good rest of the day and let me know if you have questions. Take care. Bye.